Welcome back. My name is Arya, and I don't waste your time, so let's get straight into it. Ladies and gentlemen, in today's video, as the title would suggest, we are going to be ranking the top 10 business models of all time, or the top 10 widest moats of all time. And so I've spent the past, I would say 30 minutes here compiling a list of like possible candidates to even be put on this list. And then in addition to that, I've spent way too long actually ranking these. And you'll see when I start to show this to you, the difficulty and sort of my thought process behind ranking them. I will say this up front. The companies 10 to like 7, 10 to 5 almost actually. Like they're very close by, but I think I've done a pretty decent job here. Now, with that being said, before we get into it, it would be important for me to actually show you guys the sort of thought process behind the rankings and how we're going to be ranking them today. And so I've just gone ahead and given us a bit of a guideline, the sort of ranking system that I have. So first and foremost, obviously, the competitive advantage that the business possesses. Why is it better than its competitors in its industry? Or in some cases, if it's a monopoly, hint, hint, why does it have no competitors, right? So what is the competitive advantage that this business benefits from? Number two, duration of that competitive advantage. It's fantastic, great that you a wide moat business, whatever the case may be. If you've only existed for like a decade and like you have leadership position in your industry, even 2 decades, right? That's not valuable as some of these businesses that have been around for 100 years. They've been the industry leader, they've been taking market share, they've been growing for 100 years in a row, right? So that's definitely more valuable than 20 years. I don't think that goes without, I think that goes without saying. And then sort of by extension to that, how many competitors have you had during this period? You guys get the idea. And then lastly, direction, right? You could have been a great business for the past 100 years. If in the past 10 years you've fumbled it and you're on the downtrend, you're diminishing as a business, then that definitely bumps you down in terms of scoring. Clear example of that would be something like IBM, right? Which, by the way, did not make honorable mention or the list. Which drives me to my next point. What did make the honorable mentions? And we'll kind of dive through them one by one here. I think, and listen, I'll go through the entire list here, but I think number 11 would actually be Disney. And so that might not right away trigger in people's head when they think of like a wide moat business. But think about it. They've had intellectual property of all these different brands and characters for 100 years straight. Sure, they have been, damaging their reputation, and some of the franchises haven't been doing as well. There's a bit of Marvel fatigue going on and stuff like that. So on the direction side of things, I think that does bump them down a little bit. But again, that's only a little bit. The fact remains, they have IP of all these characters and all these brands. Like realistically, Mickey Mouse is not going to be reinvented, nor is Star Wars, nor is the Marvel Cinematic Universe. They own the intellectual property to all these different things. And then on top of that, they've built services around them. So they have the parks, they have the toys and the streaming service and all these different things and all these levers of monetization that they could pull on around this IP. And so it truly is one of the most unique businesses in the world because of the fact that it has the resources to be able to sell you these services, and then it has the IP that the customers care for and that have grown up watching and absolutely love and stuff like that. Realistically, you're never going to replace the love and passion that a fan who grew up watching Star Wars is going to have for that series, no matter what. That's such a unique thing that they've managed to capture over the past couple of decades. Granted, they've messed it up in the past decade with the whole streaming stuff, countless acquisitions, stuff like that. So this would be number 11 in no particular order, but we're going to kind of go through these here. I put Ferrari on here as well. Again, kind of self-explanatory. It is just such a unique brand. The pricing power that they hold with their Ferraris kind of speaks for itself. A cool little chart I could actually show you guys, which I should have built. I'll be right back. So we have this feature on Fiscal, formerly known as FinChat, where you can make custom metrics. So sometimes we'll have the ratio or the number or the KPI on the platform, but then the company doesn't report it as something unique and of like themselves. So for example, we have a KPI on car revenue and the total number of shipments. And so, using those two numbers, you could figure out the average revenue per car. And so again, Ferrari themselves doesn't outright report this number, but you have the numbers to figure it out, if that makes sense, right? And so you could see, like, over time, and this does include what's it called? Parts revenue, which is, like the servicing, I would assume. But nonetheless, I would assume the bulk of this revenue is from them selling the cars. And you can see it's just up and to the right. This has roughly doubled over the past 10, 12 years or so. And so again, it's that untapped surplus and pricing power that this business holds and customers are willing to pay for it. There's like 70 years of heritage and marketing that has gone into building this brand. I don't think it's going away anytime soon, and it's such a unique value prop as opposed to like even other luxury car brands. It's just not Ferrari. Ferrari's like, you know, the gold standard. I don't think I need to explain myself. LVMH, this is the parent of 75 different luxury brands. They're the biggest luxury brand, and so they own Louis Vuitton, Dior, Fendi, Celine, Givenchy. They own Hennessy, like the drink, a whole bunch of wines, Bulgari, the watch brand, I believe, Tiffany & Co., Sephora, and the list just keeps going on and on, right? This is the full visual for it, by the way, right here. But yeah, they benefit from a huge amount of scale, and so that's just a brilliant business on that front. They could do acquisitions that other companies can't match. And yeah, just brand value story all over again. Nike, again, brand value story with that. You're not going to go back and capture Michael Jordan again, right? Like, what's the golfer's name? The greatest golfer guy, right? Like, so you can't just go back and capture these athletes. Like, it would take you 40, 50 years just to catch up to where they are today. Never mind what they're going to be. Again, very strong brand. Coca-Cola, very strong brand. Global distribution. It's the only company that supersedes all borders. You could get Coca-Cola in every country in the world. Now, I have Walmart and Costco grouped in together here. I would say Costco is probably wider moat than Walmart, just given that they have the membership and how that drives higher frequency usage of, I shouldn't say usage, but higher frequency shoppers, larger basket sizes and stuff like that. And then Walmart, just because of their fulfillment, operational excellence, the fact that they're the biggest, and just, you know, scale benefits. American Express is on here as well. Again, just a whole lot of branding and like scale benefits involved in there. You'll notice, by the way, a lot of the branding companies I've kind of put outside of the top 10. Moving quickly here because we're so far into this video and haven't cracked the top 10 yet. Novo Nordisk and Eli Lilly, again, patents and insulin, great stuff. And then finally, I think the most interesting, I put General Electric in here. And the reason I put that is because, and I haven't looked into this too much, so part of the reason why it's not in the top 10, because I just frankly haven't done the research, but this is GE Aerospace. This business is just aerospace now, right? I believe. And so I was listening to Chris Hone do an interview, by the way, great investor, and he was talking about how, like, because they're a big investor in GE, I think it's his top holding. Let's double check that. Yeah, so it's Chris Hone's top holding at 22%, and he bought it, like, I remember like 3 years ago. And when he bought it, he's buying it at like $50 a share. It is now, you know, in the hundreds. Yeah, it's almost $300 a share. I think he bought it around like 60, 70, right? So it's done phenomenally in over the past, give or take, 3 years. And he was talking about it, and part of the reason he bought into it, sorry, it seems I was blocking the chart here. But yeah, part of the reason he bought into it was the fact that, you know, creating a jet engine, there's so much regulatory pressure and stuff like that. And it's a very difficult task to meet that bar. There's not going to be new competitors, very capital intensive, requires a lot of expertise within the industry and stuff like that. It's just so unbelievably difficult, and that's kind of part of the moat, right? Anyways, let us get into the top 10. First and foremost, I've pulled up the 10th company, I think with the 10th widest moat on earth. And I might get a lot of scrutiny for this, but I do think it's Apple. I think if you look at what they've built with the ecosystem, you know, how the products work well with the other products. If you look at, obviously, I think it probably is the best brand in the world. Maybe Coca-Cola is the only company branding wise that can compete with them. Or like Ronaldo. I think that would be an interesting experience. What percentage of the world knows of Ronaldo's existence versus knows of Apple's existence? Ultimately, that's how you would measure branding. Or I guess it would be value terms. I don't know. Anyways, I do think it's a great business. The only issue I have with it is that they're literally getting their market share taken away. I think there's a decent percentage of the consumer that is anti-Apple, and that is probably increasing as a percentage. Of course, you have your fanboys. I included, like, I have every Apple product known to man. I just got my first AirPods in like 6 years. I've been anti-AirPods for 6 years, and I got a pair recently, and they're fantastic. I'm looking at the box on my desk as we speak, but I do think there's a percentage of the consumer that's just alienated from Apple's brands. There's a bit of them suffering from their own success. The iPhone revenues have been flat for like 3.5 years now. That's not to say this company isn't prone to cyclicality. Their history shows that they are a very cyclical business. And I'm going to eat maybe in the future, I'm going to eat my words here, but like, I think this time it's different. the iPhone is the most successful product of all time. And there's no way to keep selling more of it. Like, people are very happy with their phones. They hold them for 3, 4, 5 years. You'll probably keep I think they've just matured out as a business, and that's fine. Like, that's kind of the point of business altogether, right? Like, you reach a point where like you've sold to all the customers you could have sold to. And I'm not saying there isn't people that are getting iPhones for the first time. That's definitely the case. I'm sure there's a huge number of people getting iPhones for the first time, and these revenues will slowly creep up a little bit. But I guess the reason why I have it down here at 10th is because directionally they have a sea of competitors, frankly, and then I don't see them getting bigger. I don't see them continuing to grow. And again, I might eat my words here 3 years down the line, but the iPhone has kind of remained unchanged, and it's half of the company's revenues. It's kind of the gateway product to all the other products. Like, without an iPhone, odds are somebody doesn't go out and get a Mac. Or actually, no, maybe Mac is different, but somebody doesn't get AirPods unless they have the iPhone already, or the watch, or they're definitely not, paying any money to Apple services for the Apple Music, or they're definitely not transacting on the App Store without the iPhone. So sure, the iPhone is only, and I say only lightly, but it's only 50% of revenues, but it drives so much more incremental revenues down the line. Like, it increases customer lifetime value. So anyways, we'll keep it pushing here. And again, I'm going to remind you, places 7 to 10, very debatable if you want to shift them depending on personal preference and whatnot. Meta Platforms has probably the greatest network effect on Earth today. There is, I think by my estimate, something like 75-80% of the world that isn't living in China, because, of course, Meta is banned in China, has an access to internet connection. About 75-80% of the world is on Meta products. That is just incredible. And then on top of that, they're still increasing at like 6-7% year over year, the number of people coming on the platform, which is just absolutely ridiculous. I don't know where these people are coming from. I could show that KPI to you guys here. So they stopped reporting monthly active users a little while ago, but they still report daily active. So this is monthly active that reached 4 billion, and they stopped reporting it. But we do still have data in terms of daily active users. And so growth for that is about 6% over on a quarterly basis. So their daily active users is almost 3.5 billion people. Billion. Daily active, by the way. And that is increasing at about 6% year over year, which is a slight acceleration over the past couple of quarters. I don't think I need to sit here and explain to you why that's just a brilliant business model, or a brilliant business period. The Acquired podcast, and I have the poster on my wall. They did a very long episode on Meta, and I think towards the end of it, they're like, or no, maybe it was even, I think it was at the beginning actually, but they were saying like, there's been no entity or anything ever that has reached the percentage of human population that Meta has. This is the first time in history that there's been something that has brought together this many people. And I guess maybe the internet would, one central thing, because the internet is like open and stuff, right? Anyways, keep it moving. Google, again, I'm going to keep saying this with every company I bring up. These can be switched around, but I put Google ahead of Meta simply because of the fact that it has the cloud business. And the cloud business is a very difficult business to recreate. And so if you're somehow not familiar with this, Google sells Google sells infrastructure for essentially the internet. And so customers of Google could put their workloads and their data and all that type of stuff onto the cloud. Google has built a great business out of it, and there's an unbelievable negative cash conversion cycle. What that means is you have to put a huge amount of upfront investment into building these data centers, and then on the back end, 3 years down the line, you reap the benefit, right? So there's not that many businesses, and we can pull up, I think just the capital expenditure number would suffice. But yeah, there's not that many companies in the world that can manage spending $67 billion of CapEx per year. They've guided for like 80, by the way. It's a terrible business model to spend $80 billion per year. Hopefully 3 years down the line, we'll make the revenues back. But of course, Google could fund this because they have that search juggernaut. I would argue YouTube is a better social media business to own than anything that Meta has. I think scrolling wise, Meta has a bit more competition. Again, not relevant competition, because Meta ads are higher value than non-Meta ads, like for example TikTok ads or whatever. Like, Meta impressions are worth more, but then again, by extension to that, YouTube impressions are worth even more. That's why people pay more for YouTube ads than they do Meta. Moving on, shocker, I've put Amazon on the list as well, and I'll tackle the cloud side of things. So I just mentioned how Google has a great cloud business. Amazon has the #1 cloud business, and so that immediately ranks it way higher. Again, the switching cost on something like this is unbelievable. The negative cash conversion cycle is apparent there as well. And then by extension to that, Amazon also has the retail side of the business that also has a terrible cash conversion cycle, because you're, building these fulfillment centers. It takes so much money, so much footprint, so many, humans and robotics and all that crazy stuff need to be put into it. And then more importantly, the learnings that Amazon has had over the past 20, 25 years to make it efficient, to get that package to your door on time, improve customer service, all that. There's no company that's ever going to replicate that. And that similar philosophy and ideology is, how AWS came about. And that just makes me that much more confident on that business. Now, moving on, I think the first business here where I think this is comfortably a wider moat business than everything I just mentioned. And I just mentioned 4 of, I would say, 5 or 6 big tech companies in the world. But I would say Hermes is the 6th widest moat business in the world. I should have mentioned this all the way at the start of the video as well. But this is of all the businesses that I know of and have researched and am aware of, right? But anyways, number 6, I would say is Hermes. I would say this is probably one of the strongest brands in the world. So we said Apple is a very strong brand. Coca-Cola is a very strong brand. Jeez, I'm starting to lose it over here. I can't talk. And I would say Hermes, even though in terms of brand awareness, it's probably not on the same level, I think in terms of monetizing their brand, they're completely one of a kind. And what I mean by that is that Hermes, similar to a Ferrari, but I think to a further extent, they play this little game with you of like, you have to buy a certain number of items and scarves and stuff, like wallets and stuff you don't really want, until we'll give you the Birkin bag. And like it's like an honorable thing. And like people play this kind of stupid from normal people like you and me, but to people that are in that world, it's like, you want to play that game to eventually get the prestigious Birkin bag. They don't just give it to anybody. It's like a status thing, right? And like they're incredible at doing that. I think the margins of this business kind of speaks for itself. I think other than Facebook, this is the highest margin business we've looked at so far on the list, including, I'm like 99% sure, including all the honorable mentions, Hermes is the highest margin business we've looked at so far. There's a reason for that. There's also a reason that this company, since going public, has averaged like a 50 PE. Mind you, they went public about 30 years ago. So they've averaged about a 50 PE or like a 45 PE for 30 years straight. Again, market recognizes this is a fantastic business. Huge amount of surplus, by the way, in terms of pricing power. They sell their bags for like 10K. They could sell them for 50. Nobody would bat an eye. If anything, it would probably make them sell better because the person they're selling to is probably not that price sensitive. And if anything, incremental lost revenues from 5xing your price is negligible compared to like all the people that are still buying it because price isn't ultimately what they're buying it for. So huge surplus. And that's the reason why these things sell for way more in the aftermarket, right? If you want to buy an actual Birkin bag, not directly from Hermes, it's like 2-3 times the price. Anyways, incredible business. I was listening to the Business Breakdowns podcast of Hermes, and they mentioned in it like about the moat and stuff like that. They were saying like, how many businesses are you confident that they're going to be here in 30 years? Not that many. Hermes is one of them. Moving on, number 5, Microsoft. I've put Microsoft here because it is the trusted partner of businesses around the world, period. Almost the highest market cap company of all time. They've been around for 5 decades and they've dominated 4 of them. They're one of only 2 companies in the world with a higher credit rating than the United States of America itself. I think that kind of speaks for itself. And then again, you go down to the margins, like there's no way you have achieved 45% gross margins without being an exceptional business. And this is an exceptional business, especially at the size that they're doing it. It's got a revenue base of close to $300 billion, unbelievable pricing power. It's like a closet ETF in of itself. They sell packaged software like no one else. And I once said this, and I think it still holds true to today. I was telling my friend Nick, I said, Nick, which company do you think has had the most impact on the human race? Like just in terms of companies that have had the most impact on the world, right? Like which company would you put at the top? He's like, I don't know. I think he kind of brushed it off as like, oh, I don't know. Like which company did you have in mind, Arya? And I said it would probably be Microsoft. Like, I mean, just look at like the productivity suite alone, or like Windows. Windows has kind of unlocked the age of computers altogether, and like all the innovations and the greatness that came out of computers. And like even to this day, like everybody uses computers to get their work done, right? So it's just such an impactful company, but that only lands it at number 5. Because next up we have the railroads. And so we'll pull up everybody's favorite railroad, Canadian Pacific. This one won out over everything I've just mentioned so far. And honestly, I'm not too confident with this ranking because there's competition amongst them, and there's like 7 of them. So there's 7 of them, but then they all have different routes and stuff, right? So like if you're on East Coast Canada connecting, all right. Anyways, the railroads are number 4. Bit debatable. I might bump them down if I were to rescore this, but it's roughly number 4, right? Yeah, these are amazing businesses because, first of all, it's a very physical moat. You're not going to go back and replace all these railroads that have been built a century ago. I think it's the only in the transportation industry, it's the only class of transportation that if there were to be a strike and the workers were to not go to work, I think the government can step in and force them to go to work. Some version of that. I might have butchered that, so I apologize if I didn't get the details right. But yeah, very physical moat. It's pretty straightforward. You're just not going to go and like replace and replicate these railroads that have been there for a century and a half. They play a very important role, particularly in North America, kind of transporting everything around. And yeah, that's kind of all I have to say about it. Now, here we go. These are the heavy hitters coming up. Number 3, and I put them together even though they're not the same business at all, but they play adjacent portions of the industry. I put ASML and TSMC. And so it's just very straightforward with these 2 companies, and I've talked at length about ASML on the channel before. If you're not familiar with the company, they make these machines, and I'll give you, I apologize to everybody who knows, I'll give a 20-second pitch. They make the machines that end up printing the chips for the stuff that goes into, like, for example, your iPhone, computer, MacBook, everything. They make the actual machines that, like, shoot the laser and, like, print the chips, right? And then by extension to that, TSM is Taiwan Semiconductor. They're the customer of ASML, and so that they'll take orders from an Apple, Nvidia, not Samsung, because Samsung does it themselves, Sony, any hardware tech giant, right? They'll take the orders from those companies and they'll print the chips for them, and then they'll sell the chips to Apple or Nvidia or whoever, right? Pretty straightforward. And so ASML has a 90% market share, like total in their lithography category, and they have a 100% market share in the leading edge chips, the stuff that goes in your iPhone, like the super advanced complex stuff. They have 100% market share because, frankly, nobody could recreate it. Now, there is talk that there's these Chinese companies that can try to recreate the ASML laser or the machine or whatever. And, like, from what I've read about it, it's like in a vacuum, under certain conditions, if the moon is red and pigs are flying, yeah, they'll be able to make it, right? And, like, that's all fine and dandy, like, sure, whatever. But then the ASML moat comes at multiple different angles, right? Like, it's one thing to achieve the technology, which is, like, basically impossible. You can't. But if you've somehow managed to create the impossible thing that nobody knows how to build, no, seriously, that's a thing. The machine comes in 7 parts, or like 11 parts or something, and then they talk to an engineer. They're like, yeah, like, we only know how to make this one part of it. There's no human on Earth that actually knows why the entire thing works. We just kind of make this one part, stick it together, and it works. So again, if you're somehow able to make that technology that nobody knows how to make, that's super precise, you would still have 2 remaining questions. Question number 1, what is your yield on these chips that you're making? Meaning, if your machine is printing 100 chips, how many of those chips have defects? Oh, 10 of them have defects. Oh, okay, so sorry. ASML's machine, only 1 of them have defects. No, we're just going to stick with that because that's just extra costs and lost revenues if out of 100 new chips that we're making, 10 of them are, we have to throw them in the garbage, right? So that's just not going to work. Okay, no, you know what? They made the impossible laser machine, and it's somehow just as good as the ASML machine. There's only 1 defect per thing. Okay, no problem. How many chips per hour can you make? Because, you know, the ASML machine that we have that's already in our factory that we paid $400 million for, yeah, that one makes 1,500 per hour. How many is yours making? Oh, only 100. Okay, right? So it's a multifaceted sort of issue to try to compete with ASML. It would take 30 years of development and tens of billions of dollars of R&D investment to compete with the current version of the machine. Never mind where ASML is going to be by the time you achieve their current version of the machine. So frankly, it is impossible to compete with. It is as strong of a technological moat of any business on Earth, period. That's it. End of story. And that's why I'm invested in the company. Now, by extension to that, TSMC also has a very powerful moat. I do rank TSMC a little bit lower than ASML because there are other competitors, but they can't do it as well as TSM. So in the case of ASML, there just isn't any competitors on the leading edge, of course. With TSM, there is competitors, but like they do it lower yield and stuff like that. TSM has a lot more benefits and scale. In time, they should win out a huge portion of the market share, and they should realistically be the only ones that can sort of do this at the scale that they can. And funnily enough, TSM's stock price has done better. Their financial performance has done better. I think they have better margins. So maybe I'm on the wrong side of history with this take, but as it stands currently, I would rank ASML number 3, TSMC like 3A. You know what I mean? Anyways, moving on. And I don't think this is going to shock anybody. Visa and MasterCard are number 2. And I think these two are the only businesses in the world that have a 5-sided network effect. And so network effect would simply be like classic example, WhatsApp, or no, let's do Instagram. Classic example, Instagram. You're on Instagram. Actually, there'll be a 3-sided network effect. So you're on Instagram. Your friends and other creators and other users are on Instagram. Or I guess users would just be one thing. Okay, sure. 2-sided network effect. Users on the network and then advertisers on the other side. As you bring on more users, that benefits more advertisers because more advertisers would want to advertise to those users, right? So classic network effect of the network, which is in this case Instagram, becomes more valuable as there's more users and advertisers coming up, and they kind of both feed into each other a little bit, right? In the case of Visa or MasterCard, and again, it's a tie sort of at number 2, it's a 5-sided network effect because there's 5 parties involved, and I'll quickly go through them, but I'm not going to explain them. I've explained them in the video that I'll link at the end of the video, and it'll actually, it's not going to be in the corner because I'm going to forget, but it will be linked at the end of the video. And so it's Visa in of themselves. They're completely in the middle. There's the business that you're buying from using your Visa card. There's you, obviously. So that's 3 people total. And then there's the 2 banks on either side. Total, 5 parties involved in any given transaction. And actually, if you look at the bank of the business, sometimes it breaks out into like another like 3-4 parties there. So even more network effects in that case. But basically at any point, any of these parties coming up. So if there's more users or there's more banks that come on to start accepting it, if there's more stores that open up their payments, if there's more banks that start offering credit cards, right? Like if any of these different components of the networks start to increase, it benefits ultimately the network. And then in addition to that, it's as rock solid of a moat as you could possibly have in the markets. Maybe not to the same degree of number 1, but it's like, it's basically there. And it's like a tax on all commerce. Like you just, in order, very unfortunate, but my MacBook just died. But anyways, we're back. I think I was in the midst of telling you that it's like a tax on all commerce, and it has to exist. It is integral to the financial ecosystem of the world. This is not an understatement, by the way. Like, I've analyzed these businesses for quite some time. Like, everything I'm saying is just fact. They do 16 trillion, Visa at least, I think MasterCard does like 12. $16 trillion of payments, of money is transferred on the Visa network annually. And this number is just continuously growing. It grows like 8% per year. And then on top of that, I think the biggest piece of evidence that this is just an all-time great, powerful business, if you look at their take rate over time, right? So obviously Visa has a take rate, like of every transaction that goes on the network. Why is this not working? Oh, it's going to be, right? Yeah. So of every transaction that goes on the network, they obviously take a tiny little percentage of it. So they don't keep $16 trillion. They keep like 0.2%, or as the fancy people say, 20 basis points. But yeah, like you look at this number, this in of itself has grown at 3%, meaning they increased their take rate on average, because it's not the same. It's like a 23-page PDF of like, oh, you know, if it's a utility bill and you're paying it online, but then you've put the card on file from before, like you're not, you know, manually filling it out on a website, put the card down months ago and it's a reoccurring payment, this is the take rate for it. And like, it's 23 pages long because, you know, they go through every instance of transactions possible, right? Oh, are you paying utilities using an American card in Portugal? Slightly different transaction. The take rate's a little bit higher, right? So it's like, it's just a bit funny. But yeah, on average, because they don't increase everything all at the same time, they increase it slowly, one by one. They might increase that Portugal example I just gave by a little bit this year, and then they'll do the other one next year. But on average, the take rate has gone up by about 3% per year. The volume in of itself has grown by about 8% per year. And it's just such a steady growth that they're going to be experiencing, right? Like, it's 3%-ish roughly take rate increase. It's 3%-ish CPI goes up, maybe a little bit of GDP growth on top of that. Actually, I'm thinking back to economy class, because there's 2 GDPs, right? One of them takes core GDP, I think. I have no idea. I can't remember. One of them takes out CPI from it. But anyways, a little bit of inflation, a little bit of GDP, a little bit of cash turning over to digital payments, right? Because there's still, I think 2/3 of the world's transactions are still conducted doing cash. So there's just so many secular tailwinds behind this business. All of a sudden, you're at 10% revenue growth by simply waking up in the morning. And I quote that from Matt Cochran, by the way. But it's just such a fantastic business. Five-sided network effect. You guys get the idea. Like, it's, I don't need to keep repeating myself here, but it's one of the best businesses. The second best business behind S&P Global and Moody's. And the only reason I put S&P and Moody's ahead of Visa and MasterCard is because this is also a network effect business, because I'm particularly talking about their credit rating business, right? And the data stuff like kind of feeds off of that. S&P has the indices business, and that's a powerful business. I would say that's an honorable mention, like with MSCI, for example. But specifically talking about the credit ratings business for these two, I think it's the most powerful business in the world, because they've maintained, the two of them combined, 90%, 95% market share for close to 100 years. And there's no other business in the world at their scale, at their size, that has maintained 95% market share for 100 years straight. It doesn't exist. This is the only company. And then more impressively, they've been able to do that while they raise prices on their customers by about 4% every single year. Again, find me another business that can raise prices on their customers at 4% per year and not experience frustration from the customers, not experience loss of revenues, churn of customers. Never mind the market share dynamic, just find me a business that has raised prices like that for 100 years straight. Probably doesn't exist. I don't even think like Hershey's or like, oh, maybe Coca-Cola actually. They've probably raised prices for a really long time. Okay, I eat my words. But anyways, very select few number of companies that have been able to do something like that. And then in the case of S&P Global, not only have they done that, but they've maintained market share. And of course, the reason for that is because of, you know, the network effect that they've built up over time, the brand name that they've built up over time. The reason they can do that is the fact that if you're a business today and you're going out there to get a credit rating to get some debt, basically, it works exactly, by the way, it works exactly like how you and I, we go, you know, we have our credit score, and if you're going to borrow 10,000 from the bank, they just kind of rate the riskiness of the debt. And so it'll be like a AAA, a double C minus, whatever, right? That's what they do. And so if you're a business out there and you try to go with another provider that isn't S&P or Moody's, the market isn't willing to give you the same interest rate. Like they'll give you a higher interest rate, and so it'll be more expensive for you. Like your total cost of getting that debt will be more expensive than had you just gone with S&P or Moody's at a higher price. So to give you concrete examples, like if you're going out there to raise $1 million, for example, it might cost you $60,000 with interest and like a $500 fee to go with S&P and Moody's, or it'll cost you $70,000 in interest and like $100 to another random company. So like that $100 to $500 difference is negligible, but you're paying an extra $10,000 in interest if you were to go with a different competitor. And this happens in the real world, by the way. They've built a business out of this. It's just a brilliant business. Another layer to add to this is like right after the Great Depression, I believe, if I'm getting my timeline right, Standards, Poor's, Fitch, and Moody's were brought in, and these were the only 4 companies that were allowed to rate the riskiness of debt for like a brief period, and it gave them the regulatory moats, and it gave them that early monopoly between the 4 of them to serve this industry for the next decade. Odds are, not in our lifetime, and maybe not in your grandkids' lifetime, there's going to be a change up in that industry dynamic. It probably is never going to happen. There's never going to be another Great Depression level opportunity for a regulatory moat of that significance to occur. Again, I might eat my words here, but there's a reason I put this as number 1 here. I do believe the core credit rating business, probably the greatest of all. And there you have it. That was the top 10 widest moat stocks of all time. I'm not sure exactly how I'm going to title it, but anyways, I hope you guys enjoyed. If you'd like to support me, there's only one way to do so. And actually, I give a great amount of value back to you, so it's a great proposition. You can join the Discord server for the price of a coffee, and you can come hang out with me and 250 other exciting, smart, ambitious investors. Again, all for the price of a coffee. You come in here, we have exclusive videos as well, so I do post somewhat frequently. Like, for example, I did this like an earnings thing, right? So sometimes people will ask me like, oh, Arya, can you do a video on Spotify earning, for example? And no, I'm not going to do a dedicated video just on Spotify earnings. But like I'll cover it in a 5-minute segment in an exclusive, no problem, right? And then you can also ask for video requests and stuff like that. Again, $3 a month, like you don't have much to lose on here. There was a free trial for it as well, like if you're very worried about that on that front. But yeah, I'm excited to see you in here. And of course, like you get to come hang out with me and other people in here as well. So should be fun. But yeah, thank you very much for watching this all the way through. Have a great day.